Hello to everybody, FutureTrend channel is again with you. We start our everyday analysis of foreign exchange trading in different currency pairs for the date of 14 June 2018. So, yesterday we had the Fed decision regarding interest rate policy. As you know, the Fed decided, as was mostly priced in by the market, the Fed decided to raise its benchmark interest rate by a quarter percentage point. More important, of course, was a press conference, following press conference by Jerome Powell after the decision making, and as we saw, this press conference was more or less positive for the future interest rate increases. That means that during the course of 2018 the Fed promised to raise its benchmark interest rate by another 2 times, and at first glance, from one point of view, the dollar should be supported because of this approach, because of more or less confident United States Federal Bank regarding the future stance, positive stance of United States economy. Anyway, the market decided to concentrate on today's European Central Bank decision, and of course probably it will be the most important event of this trading week. And from that point of view, of course, it will be very important how the ECB will evaluate the current stance of European economy, and what's really most important, should the ECB discuss an exit from its super easy monetary policy conducted right now, and when it will be the first interest rate increase from the part of ECB. That's most important questions the Mario Draghi, the president of the bank, should answer during his press conference that should start around 12:30 Greenwich time. So today all eyes on ECB and the press conference of Mario Draghi. In case of really large kind of fluctuations, but we believe they will come after the decision, we will come with another analysis updating our strategy list. As regarding today, we still keep our long position in the euro dollar accumulated at 117.05, and we suggest that sooner or later the euro dollar should at least test its psychologically important barrier 120. If you see a larger kind of a longer term kind of chart here, formed a kind of head and shoulders pattern. That means that in the coming days, in case of upside resolution of the euro dollar, the pair could retest its psychologically important barrier 120 mentioned above. Its moving average 200 daily line located at 120.07 at the moment, and also its resistance barrier, a resistance barrier of the right shoulder, that's located around 120.90, 121. That's coinciding with the highs of 2017. Only break and subsequent closing on a daily basis above that level should return the euro dollar to its bullish trend we witnessed at the beginning of 2018. The dollar yen right now trading around 110, once again turning from the highs registered during previous trading week, previous trading day, around 110.85 to current lows below 110. That's not only because of last Fed's decision, which, to say the truth, was positive for the United States dollar, but the market trying to concentrate on the United States trade policy. As you know, today the president of the United States will meet with its trade advisors, discussing when to start imposing of new tariffs against Chinese goods that are import to the United States. Of course, it's a kind of very important risk kind of factor, and from that point of view, in case of a real imposing of new tariffs against the Chinese goods, of course the Japanese yen that has safe haven status should follow to the upside. That means that the dollar yen will go to the downside. Also, some other yen crosses, for example, a euro yen at the moment start to erode its immediate kind of uptrend located around local levels of 129.90. That means that while we are trading below 130.90, where lies a longer term downtrend line, the pair should remain bearishly tuned, let's say so. As regarding the sterling, here the situation is a little bit complicated, as we suggest, because there are some kind of political factors that should support the cable, but at the same time the longer term perspective, technical perspective for the cable remains quite negative while we are trading below 137.10, where we seeing a kind of important technical barrier to the upside. The dollar Swiss, a while below 99, the pair should remain in the range, let's say roughly between 0.98 0.99. Break above 0.99 on the stronger basis should take the pair to its short-term downtrend line located around 0.9955. That's the downtrend line of 2018. From a longer term point of view, we should keep our short trade recommendation, suggest that sooner or later the pair could retest its moving average 200 daily line located at 0.9715. So from that point of view, probably we will change our target level in the dollar Swiss to 0.9720. Also today, the United States retail sales report should come, as well as the same data for the English economy. And from that point of view, sterling crosses as well as cable should remain volatile. Here it is our strategy in the euro crosses, where we still have some long position in the euro ruble and some short position in the euro sterling, but with very close stop loss. As regarding the commodity block of currencies, here it's our strategy list. The Australian dollar is lagging behind other major currencies, and that's because probably that Chinese central bank decided to leave its interest rate unchanged. We'd like to remember you that the market anticipated an increase of the benchmark interest rate from the part of Chinese central bank to follow the decision of the Fed that happened yesterday. Thank you very much for all of your attention of our channel. In case of large fluctuations in the market, we will come with updating of our strategy list after the ECB interest rate decision and after Mario Draghi ends its press conference. Thank you very much. We wish you a pleasant and profitable day ahead. It was FutureTrend channel with you. Bye bye for now.